Hey, welcome back to Two Super Guys Trade Stocks. I'm Dylan.
And I'm Vinny, and today we're going to talk about the things that Jamie Dimon, the CEO of JP Morgan Chase, had to say about the American economy after they reported earnings and crushed it like usual.
Ooh, let's get to it.
Two Super Guys Trade Stocks.
Is his last name pronounced Diamond? Because that's awesome.
Yeah, it is
Yeah,
actually.
he was
Yeah.
born to run a bank. All right.
I mean, he was, but I was just thinking you have these two guys with these beautiful white heads of hair blending beautifully with this hurricane in the background. It's just a very serene picture.
Yeah, don't look into it.
So Jamie Dimon is the guy who's quoted as saying that there was like a hurricane coming for the American economy, right? And he's the CEO of JP Morgan Chase. They reported earnings last week, and he gave some color about what he's seeing in terms of how the American consumer is behaving and where he thinks the American economy is headed to. So we're going to talk a little bit about that today. Um, he did talk about the whole UK pension fund thing, which was kind of interesting. He was like, "Yeah, I was really surprised to know that they were that levered up." Remember, we did a separate video about this, and other
Yes.
things have happened in the UK since then. But yeah,
Yes.
uh,
Bad things. Shortest
so
stint in prime minister history.
yeah, that's fascinating. What you really kind of see when we have these major economics, kind of moments of uncertainty, is that you find out who's been swimming naked. Is like the famous Warren Buffett line, and that's where you're starting to see a little bit of cracks where no one knew that the UK pension funds were super levered, but now we do. I'm sure there
Yeah.
are many more. That's what he
Oh.
says. He says someone is going to be offsides. He's like, overall, the U.S. banking facility is still very strong. But he also kind of hinted at the fact that we're seeing more volatility because that strength requires them to have larger cash reserves. Therefore, they're able to act less quickly when the market moves to make purchases, because they want to maintain that cash reserve that they are required to now by law.
Right.
Um, so we're seeing what may be probably the most volatile year in stock market history play out this year, which is kind of an interesting factoid. Once we officially cross the line, we can do a separate video on that.
Yeah, I don't
Um,
know about that. More volatile than COVID? Just down like 20%, up 20% in like a month?
oh, okay. Yeah, from that standpoint, I'm talking about the fact that we've had more days with massive swings than like almost
We
any
have
other
had a
year
weird
now.
amount of days. That's fair. Yeah,
Yeah,
there's like a
yeah.
weird amount of
Um,
2% plus or minus days.
exactly. So that's what he's talking about is how the market's seems fragile because the banks are unable to actively move in when they see the kind of mispricings as aggressively as they would have in the past because they're maintaining these large cash reserves. Right? He talked a
Hmm.
little how yeah the Fed raising the interest rates and how they're having to do that to fight inflation, of course, as everyone knows. The earnings beat was pretty solid right here. Beat EPS by 9% and revenue was 3% above what they expected. If interest rates going up is good for banks, right? They theoretically make money on that interest spread.
Yeah, I mean, they should have a really good 5 years. Like, I would think they would because interest rates are going to be going insane.
5 years,
Like a
five
really
years.
good like 5 year from collections. Like I'm digging
Ooh,
Bank of America at $33 right now.
yeah, I own a little bit of Bank of America too. I just don't own any JP Morgan Chase. So this is another article here talking about comments regarding this hurricane looming. He did actually give a timeline. I can't remember if I put a slide in here with it, but I think he said it was about 6 to 9 months out, somewhere in that ballpark. So he sees it now more in like the latter half of 2023 is where he's going to see the major economic downturn is what he's expecting. Um, they did talk a little bit about how credit conditions tightening here a little bit, and that consumers are not quite as healthy as they were before, having to
They
use credit
definitely are
cards.
not.
Yeah, credit cards are going up, saving rates are going down, but behavior hasn't changed as much as I would like to see. I always comment on this every time I go out shopping with my wife. It's like there's still people like just packed like 15 deep to check out at TJ Maxx, and it's like why?
Yeah, so we did a video on this, and the current economic climate is not it's not as correlated as you would think to the American consumer. Credit card debt is going up, savings is going down, rates are getting worse and worse and worse, and will continue to get worse and worse and worse. You would think people would be saving more and more money, and in my opinion, fuel is about to get real shitty in like the next 6 months. So I don't know what's happening.
Yeah, you're not the only one kind of thinking that. I know someone commented about diesel inventories in the U.S. being at like one of the lowest in some odd, crazy number of years. Um, but like I said, this is that comment where he's talking about we're getting closer to the bad events in my hurricane, the financial hurricane that he thinks is coming for the U.S. economy. And obviously, this is a guy who it's worth listening to his thoughts about this because he's got his pulse on the American economy in terms of seeing how everyone that has access to J.P. Morgan Chase bank accounts is spending their money and what sort of health the average consumer is. And I can only imagine the data mining that they do. It's probably ridiculous.
But it should be noted, he just kicked off. Didn't he just kick off Kanye West from his bank? Was it
I
Chase?
don't. I have no idea. Couldn't
Someone
tell you.
kicked out Kanye from banking.
Yeah, did he get thrown off Twitter too, or
I
something?
don't know, dude. That guy's crazy.
I think he did. But yeah, this is what we're talking about here: the higher spending. Obviously expenses have gone up, but and people are being forced to just put it on credit cards, and it's eroding the savings rates that they're starting to see. So historically low, not good. We can actually there's separate charts you can pull up for actual savings rates. This is the end of the presentation, but
Yeah,
yeah, definitely interesting.
we looked at that before, but essentially during COVID, savings rates went up quite a bit. We were getting stimulatory stuff. Also, depending on where you were at, you didn't have to necessarily pay rent. It was kind of a thing. It's all
Yeah.
gone, and I do see an inappropriate amount of nice cars in front of not correlated nice houses. Does that make sense?
Yeah, I've often thought that there is like the tiers of American life. There is the crappy house, no car. There is the crappy house, crappy car, the crappy house, nice car. As you
Well,
continue escalating up to get to like the houses where you're like, wow, it's a $6 million house with like two Mercedes Benz like G wagons parked in the driveway. You're like, oh, damn, nice house, nice cars.
yeah. There's a weird amount of like $60,000 Teslas parked in like a neighborhood that I own a house in. You should not have a $60,000 Tesla in that neighborhood. It doesn't make any sense. So I think people are really over leveraging themselves, and I think maybe like 6 months we might have a little bit of a problem.
Yeah, so repos have started to climb up, vehicle repos, but we're coming from off historically low levels, right? Because people had equity in their cars, which is something like almost never happens.
Yeah, it's
So they were
weird.
never going to that's before.
But you're buying a car now. It's at 6% interest. I just had to buy a car, right? Lowest interest rate was 5.7. It's
Yeah,
wild.
yeah. And there's a separate video actually. We could do a reaction to this where someone's walking around a car dealership asking everyone what their car payments are. Wild numbers that you would even begin to like comprehend as being a vehicle payment, and some people have more than one that are in that ballpark.
Yeah, my
Disgusting.
first mortgage was 800 a month, and that's cheaper than car payments now. So that's gross.
Yeah.
All right,
Well,
dudes.
yeah. Let us know everything about this hurricane.
Give us a like and subscribe if you're just a little bit bearish. Bye bye.